Hey, good morning. This is Mayor Valensky with Driving Markets. Okay, let's have a quick recap what happened yesterday. So the Fed came out with its March minutes, the minutes of the FOMC meeting, and they had clearly stated that the banking crisis is going to bring the US into recession in 2023. Now, I've been saying this all along, well before the banking crisis, that there's going to be a recession in the US and in Europe and in the UK. Now, even though technically, as stated before, there's not been a recession because GDP has been in positive territory. Remember, the main measure of recession is 2 quarters of negative GDP. And that has not happened, even though in the States it did happen last year. There were 2 quarters of negative GDP. Somehow Biden and his administration danced around that and said, well, that's not really a measure of recession. So again, even if GDP is in positive territory, or even if it goes into negative territory, the Biden administration will dance around it because it doesn't look politically valuable to them that effectively the GDP is negative and there is a recession. But the Fed did state in its minutes that there is going to be a recession by year end, by the end of 2023. Now, that is in light of the fact that inflation has got, or official inflation has gone down in the US now to 5% annually, all the way down from the 9.1 or 9.2% that was reported in June last year. Now, that inflation figure, even though it's produced by the Bureau of Statistics, is a measure of a basket of goods. It's not real inflation, okay? Obviously, a lot of it is manufactured, it's adjusted, it's amended, it's messed with. But the real inflation is what you feel in your pocket. And if inflation is down at 5%, and I wish it was only 5%, then why is it the cost of goods, the cost of food, the cost of energy, the cost of housing, and generally the cost of living is much higher than 5%? Why is it that you are feeling it much more in your pocket? If it was only 5%, then that would be great. Then you would see that all your vegetables and all your foodstuffs are only going up by 5%, but they're not. Food inflation is running at anywhere between 17 and 20%. However, when they put that into the overall manufactured measure of the Bureau of Statistics, then they say, oh, it's fine, it's only 5%. What they're trying to do is they're trying to calm down Joe Public and trying to make them get a good feel factor that inflation is not running high and everything's under control. When inflation is not 5%, inflation is running a lot higher than 5%, but officially they put it in at 5%. Taking that into account, that yesterday equity markets jumped up initially on the back of the minutes of the FOMC, and then they sold off and likely to sell off further. Looking at gold, gold's very interesting because gold is likely to move higher. Remember, it's cleared the $2,000 an ounce level, and it looks like it wants to go to 2040, 2050. Once it gets there, then if it breaks higher, then it's going to go all the way to 2100. Cryptocurrencies, Bitcoin is solid at 30,000. All of those bulls are looking to push it to the next level of 35,000, and it probably will get there on the back of the energy behind it and the momentum. It looks like it's going to be 35,000 the next level, and those people who are looking at BTC or looking at Bitcoin are looking to push it much higher. Will Bitcoin become the alternative banking payment system for the rest of the world or the global system? Unlikely at this stage because it's not built in enough into the payment system. I personally am not a big fan of Bitcoin. I want to state that very, very clearly. I'm not a big fan of Bitcoin, and I don't think it is going to happen. It hasn't got really any fundamentals to it. It's very binary. It's very up or down, and there's no economic measure as to what is going to put Bitcoin or the cryptos in any particular direction. So I'm not a big fan on a basic analysis and economic basis, but simply the fact that it's already integrated into the system, it's already integrated there into as financial assets, then you can't ignore it, and you have to really comment on where it's going to go. So in my opinion, it's going to go to $35,000 in the near future. That does not mean I'm a big bull. I'm just giving you an independent, objective opinion of where Bitcoin is going to go for those Bitcoin traders. Foreign exchange, dollar weakness, pound strength, euro strength. The euro is approaching the 110. Why is that? Because there's more likelihood now that interest rates are not going to go up in the US unless something cataclysmic happens, which is unlikely. So therefore, the US interest rates are going to continue either staying as they are, or by 2024 may even come down if the official inflation number comes down, which looks like it's been manufactured by the Bureau of Statistics in any case. So you're going to have dollar weakness, and you're going to have pound strength, euro strength. You're going to have also dollar yen strength. You're going to have to see the dollar yen go up, because the dollar, remember, the yen is at 0 interest rates, and the US is running at around about 4.75. So there's more traction to go into the US dollar than into the Japanese yen. So take that into account. Equity markets overall look like they've topped out. In my opinion, they're ready for a sell-off, not on the back of interest rates or inflation, but could be on the back of recession fears, economic slowdown, etc., etc. Oil is running at $81 a barrel. OPEC will probably cut production even further in the near future in order to get it back up to $85 or $86 a barrel. That will suit them very, very, very well. Generally talking about a downtrend in US markets and European markets as a result of slower economic growth and a potential recession, as stated by the Fed minutes of March this year. That's more or less it for now. You can subscribe, you can comment, you can share, you can catch me on also on Instagram and on TikTok. Have a good day.